This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly market news update. We're going to focus in on February's inflation figures falling short of forecasts. There's lots of things happening. Before we dive into that, I want to remind you, if you're an Encompass administrator or you're looking to become one, or even improve your skills with Encompass web interface, make sure you head over to masteringencompass.com. Sign up for our Mastering Encompass admin coaching and certification course. It guides you through every single setting, both desktop and web. And most importantly, it gives you live training each and every week for 90 minutes. It gives you a one-on-one session once a month. And you stay with me personally for the entire year, making sure that you can master your Encompass platform from end to end. Hope to see you there. So the story for the market here is, this is for the review for the week of March 10th, 2025, and inflation pressures moderated in February, and January job openings exceeded expectations. However, a closer examination of the data uncovers important insights. Here's the stories we're going to get to today. We've got consumer inflation progressing lower. You've got wholesale inflation easing, yet key areas are increasing. You've got January job openings rise, but signs of weakness persist. You've got continuing jobless claims remain stubbornly high. We've got a family hack of the week in there. And then we've got to look for what's going on this week. So let's dive right in here. First story, consumer inflation progresses lower. We see some image on here. By the way, if you're listening to us on podcast, thank you very much. Head over to masteringенcompass.com. You can see this full video and everything I share on screen, which is also where you need to see the family hack of the week. We'll see what that's all about. Important stories here are that following a surge in food and energy costs that drove inflation higher in January, February brought more encouraging data with both the headline and the core consumer price index, that's a CPI, those readings falling below forecasts. Headline CPI rose by 0.2% month over month, and while the year-over-year figure dipped from 3% to 2.8%. The core CPI, excluding that food and energy, which is usually volatile, that also increased by 0.2% month over month, but softened to 3.1% year over year. That was down from 3.3% in the previous report. So what's going on here? The fact is, the shelter component remains the primary contributor to the ongoing inflationary pressures. That accounts for 35% of the headline CPI and 44% of the core CPI. So what's important here is a significant weight indicates that shelter costs are pivotal in influencing the trajectory of inflation. February's month-over-month shelter data was also favorable, and the year-over-year reading of 4.24% showed a decrease of 0.2% from the prior report. However, this year-over-year figure remains elevated compared to more current rental data from sources like Realtor.com, Apartment List, Zillow, and CoreLogic, which reflect an approximate blended increase of 1.6%. As CPI reporting catches up with this real-time data, it should assist in further reducing inflation. We shall see. So next here on the storyboard, we've got wholesale inflation eases, yet key areas increase. The Producer Price Index, that's the PPI, that remains stable from January to February, with the annual rate decreasing from 3.7% to 3.2%. This was aided by a 1.2% reduction in energy prices. Excluding the more volatile, it's not favorable, it's volatile, food and energy sectors, as we talked about in the previous story, that core CPI slipped by 0.1% month over month, while the year-over-year rate fell from 3.8% to 3.4%. These figures were below expectation. Bottom line in this story, of course, at the wholesale level, is the PPI data is crucial as it impacts the personal consumption expenditures, that's the PCE. And guys, remember, this is the Fed's favored and preferred measure to gauge inflation. While the overall PPI showed cooler results than predicted, an analysis highlights the increase in significant areas such as healthcare, then that may influence the personal consumption expenditures. It's PCE. So The upcoming PCE report is set for March 28th, and it'll be worth watching to assess any hotter than expected outcomes or whether these factors, as well as others, will mitigate these increases. We'll see. Moving on to the next story, we've got January job openings rise, but signs of weakness persist. So following a significant decrease in December, job openings rose in January from 7.5 million to 7.7 million, slightly surpassing expectations. This increase was also particularly noticeable in retail and finance sectors. However, professional and business services, as well as leisure and hospitality, they all experienced marked declines. Both the hiring rate of 3.4% and the quit rate of 2.1% neared their lowest points in a decade. This excludes, of course, the COVID-19 period. This reduced hiring rate complicates a job search for unemployed individuals, while the decline in quits reflects a lack of confidence in securing new opportunities. Bottom line in this story is, although January registered an uptick in job openings, the data reveals underlying weaknesses in the labor market. Overall, job openings continue to trend downward, considerably below the peak of 1.2 million in 2022. Additionally, the report included revisions that lowered job openings for all of 2024 by an average of 263,000 per month. It's huge. Plus, job listings may be overstated on top of that, as the rise of remote work, I don't know why it's a rise. It's like as remote work has resulted in postings across multiple states. We know this. And they might have contributed to an overcount in the JOLTS data. And that's the Job Opening Labor Turnover Survey Report, JOLTS. Say that 3 times fast, right? All right, we're going to continue the next story here, and it's all about continuing jobless claims remain stubbornly high. We know that initial jobless claims dropped by 2,000, landing at 220,000 for the latest week, and remained fairly stable overall. But continuing jobless claims saw a decrease as well, falling by 27,000 to 1.87 million. We were worried about this last week going into this week because of all the layoffs. However, it's worth noting that they've been hovering above 1.8 million since last June. That's June 2024. Bottom line here is new unemployment claims continue at historically high levels, but the persistent elevation in continuing jobless claims suggests that job seekers are experiencing longer periods of unemployment. Additionally, since many individuals receive benefits for only 26 weeks, the rise in continuing claims as these benefits expire also indicates a weakness in labor market and slower, higher pace, aligning with the low hiring rate as reported in the JOLTS data. All right, guys, it's St. Patty's Day week, and here's a family hack of the week. If you're looking for a delicious treat, these soda bread biscuits from the Food Network are a fantastic choice. If that's into you, go to here in the video. If you're listening to audio, head over to masteringcompass.com, check out the video in this spot, and you'll see the recipe on screen. All right, gang, here's what we're looking for this week. We've got Federal Reserve meeting, of course, is the primary focus this week, with the monetary policy decision and press conference scheduled for Wednesday afternoon. Key housing data will also be released, including builder confidence on Monday, construction data on Tuesday, and existing home sales on Thursday. Additionally, retail sales will be reported on Monday, and jobless claims figures will be available on Thursday. We'll see what happens. My name is Larry Bailey. Thank you for listening. Head over to masteringcompass.com to get the most information out of Mastering Your Encompass platform, or of course, mortgageworkflowpartners.com. If you want to have us help you with anything with regards to your business to get better workflows and usage of your Encompass platform. We'll see you there. Take care. Bye-bye.